if there was an 80% chance that they reach, real AGI, truly, you know, the crazy like $1 trillion revenue God mode thing that they think they're building, where the artificial intelligence is at the same scale as a human or better, then sure. But I think you would have to be on drugs to tell somebody there's an 80% chance of that. I'm not sure you can make a solid case that there's a 20% chance of that. So to watch them all go all in on something that, I don't know, maybe has a 20% chance of being real just feels, it's intense. So I'll say that.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back. Thank you for joining us for another edition of the Daily Dots. And we were just joking offhand. Some, I guess you'd say, decent news, I guess, on the China trade deal. But I was like, but as I was joking with you, I didn't realize that equities had priced in a lot of risk to things going badly with China. I'm just laughing watching this market ripping to the upside on effectively what isn't news.
Yeah, what I was just saying too before we roll, like this is the fourth trade deal of the year, and what this has turned into so far, maybe this one will be actually real or whatever, but is we start at this baseline, we put restrictions on each other, make each other mad. We have a meeting at the end of the quarter, and we say, just kidding, we'll take all that stuff back, and then we start the quarter over, and then rinse and repeat. We're almost where we started the year. But we keep putting things on each other and taking things off. It's interesting. But we rally on every one of the 4 trade deals we've had with China this year.
Yeah, I just to me, I just think that the U.S. markets continue to get more laughable. Meaning, not laughable in the sense that I or anybody else knows what direction. I don't. I would love to. I would love to know. I just, you and I, we've been talking about the international trade for a really long time. Whether you're looking at a chart of EMM, whether you're looking at a chart of Latin America, it is all so substantially cheaper than the U.S. coming out, with real meaningful economic acceleration. I just, I continue to just look at the U.S. markets and go, cool. Yeah, I'm just not interested.
Right. Exactly. I mean, just looking at it now, I mean, you're up about 16, 17 now in the S&P for the year. And that still ranks in like the bottom, at least third, if not quartile of all the different country ETFs you could have bought at the beginning of the year. I mean, put it this way, Argentina is up 24% today. And it's still only up like 6-7% on the year. But then you have like, let's see. All right. These are just countries that are up more than 50% on the year. Colombia, South Africa, Vietnam, Peru, Spain, Greece, Poland, South Korea, all up over 50. The U.S. is up 17. And I think, if you just stuck your finger in the air, you would think we were up 30 by the way everyone's reacting.
Yeah, I know. It's really bizarre. And then you go do comps to the underlying economies, then go look at valuations. And like I said, I continue. I'll go back to that old analogy. I'm not saying you can't win I'm not saying you can't win in U.S. stocks. I'm not saying they won't continue to go up. I just look at all these other markets that are breaking out and breaking out of 15 and in some cases 20-year downtrends. And then you look at the underlying valuations. I'm just sitting there going, yeah, there is absolutely no question in my mind where that capital is going to be treated better over the next 5 to 10 years. And, I think not allocating to that stuff, in the past, we've said in time, I don't think that'll look prudent. I don't think it looks prudent now. I think it's stupid. I think you've got generational buying opportunities in this stuff. not stupid picking the individual one, and I'm not saying that, but I just mean if you're not allocating, if you're not pulling money off the table of U.S. equities and allocating to other parts of the world right now, you're not a real professional in this business. And if you are a real professional, you shouldn't be. I'll just say it, like, plain and simple.
Yeah, I mean, in even just today, where it seems like the U.S. is like really breaking out in a lot of ways, like still being outperformed, obviously by Argentina, but by most of Asia, like Japan, Hong Kong, Singapore, let's see, Israel, China, Mexico, Italy, South Korea, all those places are outperforming the U.S. today. So like even on a day where it feels like you're unhooking the trailer, you look up and it's like, well, Asia's still better.
Yeah, yeah. And then like I said, I just look back at these multiples, and I just, and the last year and a half, 2 years are proof that multiples don't stop things. That's why you and I always say that
Sure.
they're horrible timing mechanisms. That being said, on a comparable basis, isn't about cool, man. I mean, you want to play for a multiple expansion on Apple from 40 to 45. Go have fun. Yeah, yeah, have a good time. Don't use my money to do it. And yeah, like, seeing that news out with Latin America, it's just amazing to me that these opportunities exist. Um, yeah, in today's world, it's just really odd, it's just yeah. I'll go back to the comments that we were talking about. We were talking about markets becoming inefficient. We were talking about the partial owner of the Pittsburgh Steelers. What's his name again? I forget his name now.
I don't remember either.
The
I hate the
investor.
Steelers maybe, but
Yeah. Anyway, talking about market inefficiencies, and it's just it really is incredible in a day and age where we've got as much access and as much availability to all this data, to all these foreign markets. It just amazes me that even in that environment, um, you still have investors so seemingly blind to opportunities out there. It's just it's a puzzler. I mean, if you were allocating money on an international basis, let's say you live somewhere else in the world right now, how much would you have allocated to the U.S. on a well, maybe I'll just say it on a blanket basis, like, meaning, how much would you have allocated to the U.S. for longer term right now? If you were an international and you had to look at it that way, let's say, okay, and they were like, Chase, look, you got to break it down. How much U.S. exposure are you going to have in this market?
honestly, for me, 10%. Like it would be really, really low.
Yeah,
And even that 10% would be concentrated in like energy or something like that. It wouldn't be what, I just, tech going from capital light to capital heavy just bothers me to no end. So like I couldn't be chasing Mag 7 personally.
yeah. Well, I mean, that's a really interesting way. That's a really interesting phrase that you just spun there, because I hadn't really thought about it in those terms. You're right. I mean, one of the brilliant aspects of that entire business was how capital light it is. And they've absolutely, again, I'm not questioning the investment choices they've made. I agree. I think they have to be pursuing this. But one of the most attractive parts of those businesses just left, right? I mean, it just exited stage right, right? Like, it's gone. It's becoming an incredibly capital intensive build or business. And here's the funny thing: is it just me? But at least from what we're seeing right now, the runway for AI over the next, I don't know, 5 years looks like it's going to be really capital intensive too, right? It's going
That's
to,
exactly what I'm talking about. Yeah.
right? It's going to keep being capital intensive, right? They're not going to build a turnstile like they have with their other businesses and then just sit back and monetize it.
Yeah. It just bothers me. And if you told me, if there was an 80% chance that they reach, real AGI, truly, you know, the crazy like $1 trillion revenue God mode thing that they think they're building, where the artificial intelligence is at the same scale as a human or better, then sure. But I think you would have to be on drugs to tell somebody there's an 80% chance of that. I'm not sure you can make a solid case that there's a 20% chance of that. So to watch them all go all in on something that, I don't know, maybe has a 20% chance of being real, just feels it's intense. So I'll say that. You can put it this way: if they don't reach real AGI in the next decade with all of this investment, then this is the biggest misallocation of capital in the history of our species.
And that's what I keep coming back to. It's not the veracity of what it is they're chasing. I get all that. It's that it's the nuts and bolts part of the financial aspect, right? Like, meaning, guys, where are we at in terms of a meaningful return on investment? Where does that start? And
Exactly.
I think the part of investing, and it's funny that this is happening at the end of this long cycle, because it it's just so it's ironic in so many multiple layers, right? Like, the thing that I think people forget, oh, it's such an unbelievable opportunity. Okay, yeah, I'm with you. But like all opportunities, we're talking about investing. So it may be the biggest investment opportunity in the history of investment opportunities. And if you throw too much money at it, it's going to be a bad investment,
Yeah. I
right?
mean,
Like,
railroads were game changing. Fiber optics was game changing. Canals were game changing. A lot those destroyed a lot of capital on the way to being game changing. So like you may have invested in the wrong railroad and you lost all your money, or you may have dug a canal that was turned out to be one that you didn't need because there was one right next to it, or you know when it came to fiber, obviously, like we laid way too much. It could just be that, like, or maybe you know, and that's even if this works out. There's the chances that it's kind of a winner take all thing is there. So if you bet on the wrong horse, like you lose because all you did was overspend. Um, so you have to bet on the right horse, and that horse has to be the one that makes it and finds a way to make money out of it, and at a scale that I can't even explain to people in
well,
words.
well, and yeah, here's the other part. I just look, and again, no indicator or prediction on short-term stock movements. But, if all of this inflection higher is warranted in AI, how does that not also apply to tech companies around the world that are trading at a
Well,
third, a fourth, a fifth evaluation? How does that not also apply?
so I would say it's because they're not doing this. Like that's one of the weird things about this. It's not that you don't see people doing AI work and building data centers abroad, because that is happening, but it's not even close to the scale we're doing it at. And to see, like, when we compete with the people like China, say Germany, maybe, like, well, Germany just announced a pretty big data center today, but uh, on like cutting edge stuff, typically if it's a really good idea and they're doing it, we're like, oh, we got to do that, or vice
Yeah.
versa. If we jump into like quantum computing, you see China going to like, yeah, we should do that too. That looks pretty insane. But here we are with AI, and like it's not like they're not doing anything with AI, but they're not building these mega clusters with hundreds of billions of dollars of capex. Not even close. It feels like they looked at this and said, yeah, we don't think this is going to turn into what you think it's going to turn into. So yeah, we're going to do AI because it's awesome and it can make our robots smarter, and it can make for useful knowledge work enhancement. But like, if you guys think this is going to turn into like Sauron or whatever, like we don't think so. So we're not gonna throw a couple trillion into silicon and copper and stuff along the way.
Yeah, it's the yeah, the spend is just mind boggling, and that's the thing. I just, well, and like I said, it mirrors markets to a certain degree, because I think that's the part that people always forget about it, right? It's not just what you think they're going to make. I mean, Chat GPT is a classic example of that, right? You've talked about the economics there a million times. It's, guys, whatever your profits and revenue are, they've got to be factored against what the investment was, and that determines the returns, right? It's not just number go up. And when you're making bets like that, it's not important. Those bets can't pay off. They have to pay off in multiples, right, to make it feasible. So, It's just, yeah, it's gotten to the point. It's funny to hear you say 10%. That's about what I was thinking. 10 to 15. I thought you'd be a little bit higher just because of the momentum. But even if you love the chart, there's better looking charts out there. That are going to benefit from the same general. If you think the U.S. economy is going to do good, then there's tons of places out there that are going to benefit from that general economic tailwind. You can just do it with with valuations that are just a fraction.
Yeah, for me, obviously it's hard to argue with the last 10, 15 years and the momentum, like you said. Um, for me, it's really the capital flow side. Like I have deep reservations about the future of international capital flows uh, reversing, going from being heavily inflows into the U.S. to being outflows for a lot of different reasons. So if that happens, I know what that movie looks like. I know how the math works. So that's where I have the biggest concerns on the U.S. That, and then obviously the concentration into a handful of names that are going all in on a technology that is not at all guaranteed to offer a return on the massive investment they're making.
Yeah. Now
So
I mean, I do understand why that all drove Tesla up 5% on the day, though.
I
You know what
didn't
I mean?
see that.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate and actual performance may differ.
So S&P closed up 1.23, Q's 1.78, and that is very much a Mag 7 story because equal weight was up 0.44, Mag 7 up 2.46. Small caps were only at 0.35, so no, they don't seem to care about China. But all world ex-US up 0.73, but as we kind of ran through earlier, Asia was much better than that. The dollar was down 0.12, and then at one point was kind of up on this. Yields were up on this, and then they petered out. 10-year was basically flat. Of note on the days, oil flat, gas flat, gold down over 3%. And if you see that on the chart, clear break of an uptrend, kind of accelerating to the downside. Gold miners down 4%, silver down about 4%. Copper was the only metal that kind of hung in there, really. And as you said, Tesla was the winner of the mags. It looks like today, up 4.3 is where she closed.
Okay.
Vol closed the day down about 3%. You're just above 18 on front month VIX. Although Google was up 3.6, so very very solid from Google as well. Let's see Amazon and Meta. Nothing to write home about. So there you
Yeah.
have it.
New all-time high for Google today. That's the re-rating of that stock has taken longer than I would have expected, but you're seeing it, you're seeing that multiple climb there to the high 20s, low 30s, catching up with its brethren.
Yeah,
Um,
it's funny you say it. Today's the first time I've looked at Google and thought this may be something we should finally get around to trimming because it was our biggest position before it went on this run.
yeah. Yeah. I mean, it's been, it's been our biggest US tech position for a really long time.
Yeah,
Um, but yeah, we've had it in size for a while. I'll tell you, it's, you never want to trim them, but, it's far less attractive than it was 50% ago. I can tell you that much.
yeah, exactly. And it's not like they're not in this ball game, right? They're not. They are in this. Let's see how much money we can spend on AI race. So
Yeah,
for the same reasons I was just talking about this, like it makes me a little nervous.
I agree with you.
They at
The
least
only
have other
thing that
streams, but
100%. The only thing that concerns me about that though is that when you look at Google's positioning in relationship to AI, chips and all that kind of stuff, it is still, it blows my mind and boggles my mind, but somehow this thing is still not associated with AI, and I actually think it's ground zero. And if the market and the public figures that out, I think you're gonna get an additional, 15 to 40% upside on this thing in a hurry would be my thought. But you're right. I mean, it's I feel like the last bastions in the S&P 500 of really good value, I just feel like they're all just starting to you know what I mean? It's just they're just going away.
yeah,
They're getting bid out of our range. Again, especially when you look at the opportunity set up there with with the rest of the world. Where is Argentina's market right now in relationship to where it's been over the last like 5 years? Their
Oh,
equity markets.
yeah. If you think of about 5 years, you're much higher. The 3 year annualized return has been 44%, um, which is so it's still like the second, third best performer in the world over the last 3 years. It's just had a bad year this year, but
But I
that makes
mean, but I mean,
perfect sense.
but it was coming out of a generational hole, wasn't it?
Yeah, yeah. Which is why like it's why it makes sense that it ripped, obviously, to go from the Peronism to you know at least getting a few things right. Um, but it makes sense that it stalled out because after you hit all those easy buttons, it starts getting hard. And that I do have some for people that aren't I guess we got to catch people up. There was big elections over the weekend, midterms, and Milei's party did a lot better than expected. And so he basically consolidated power for the next 2 years. Should be able to get things through Congress in a way that more easily than he's already been able to, and much more easily than it looked like was possible going into the weekend. But the all that low hanging fruit has been picked, and it just gets really hard from here. And I'm of the opinion they have a few blind spots, and they're doing a couple of things wrong that they have to fix to kind of get out of this problem. And I think they're keeping the peso too high, and that's hurting them. That hurts everyday people in a lot of ways, actually. And they have to balance like trade in a way to actually settle out this currency thing, or you just end up leaking. Every month they're just going to leak and have these capital outflows, and you're going to be right back to where you started when you needed to borrow a bunch of money from the IMF in the U.S. So, but as long as he follows up on the first 2 years of reforms with another 2 years of needed reforms, then they could be in a much, much better place 2 years from now.
Yeah, I thought that was really good news, at least from my opinion, economically speaking. I don't think Malay is I don't think he's God's answer to politicians or anything like that. But I think as far as his government's concerned, and as far as that country's concerned, I think that they offer the Argentinian people the best shot right now.
It's
Um,
better than the Peronistas, that's for sure.
yeah, yeah, and then if you look at also the progress they have made, um, it cracks me up when I hear people taking shots at their government because, oh, this is too high or that's too high, and you're going, look, dude, look where they were coming from, man. If you're taking shots right now, you're not paying attention. I mean, shoot, weren't they around like 900% inflation not that long ago?
I think they went from 300 to 30 essentially.
Okay, okay, well, yeah,
Substantial.
yeah. So, I mean, yeah, if you're not going to give the guy any credit for that, that would suggest to me you're not very serious about this, or you're just purely playing politics because that's pretty remarkable in such a short period of time. So,
Yeah.
hats off to
and
those
and, and
guys.
that, and that caused a lot of pain. So like the fear always when you have these moments is like, all right, can you will the pain make people mad enough to just flip on you,
Right.
or will they give you enough time to like see it through? And even in the region, and even in Argentina, because we had this with, oh man, I can't think of the guy's name. Tried similar stuff, and 2 years in, like, no, this isn't fun. Let's go back to giant subsidies and stuff. So to get a full 4 years, they'll have the chance to get it right. So hopefully they land the plane in that 2 years, and they don't have to go back to what obviously doesn't work. And as we talked about um, on Hidden Forces together, like the regional side of this too, like I know I had some concerns that you would go from having a wave of economics that at least makes half sense, kind of spreading throughout the region. Like people would see like, oh, that seems to be working pretty decently over there. Have we tried that? So to see him get a chance to solidify the position gives me some more hope that the rest of the region can continue to go from things that clearly don't work very well to things that at least have a chance.
Yeah, it's kind of like potty training a child. Like you look at what they're trying to do, it's like, oh man, this really stinks. This is awful. We're just gonna go back to bottle feeding, Yeah, like yeah, when you get into these situations, and that's why these situations always spiral so out of control, is because I think politicians make a lot of unfounded promises and set expectations too abnormally high, but also everybody's tired of the problem, but they're also not willing to put up with the pain of fixing it. And you get in a situation like that, you just have to accept it. It's not going to feel good, right? I mean, it's not. Cutting out an infection doesn't feel good, but it saves the limb, And it reminds me a lot of the incalcitrant nature of politics here in the United States. Same kind of thing, right? Why don't we get these hard things done? Because we can print money and afford not to.
Yeah,
I mean, that.
it's like on a personal level. If you go from spending more money than you have to spending less money than you have, it hurts. It doesn't feel good. But if you have a debt to income ratio of that's in the sky, like, well, that's what you have to do.
Yeah, and if you don't, it'll happen.
Yeah.
It'll do it on its own for you pretty soon, right? So just sit there and get patient. Uh, Interesting start to the week. I would still sit there and say that I think the thing on my list is, don't really care what this market has to say because they have the same answer for everything. But um, I'm keeping an eye on the Chinese U.S. trade talks going forward for the week.
Yep.
What do you think we should keep our eyes on?
That's number one. Because the reality is we haven't got too many details out yet. Especially from the Chinese side, they've been pretty tight-lipped. So we won't really know much until the Xi Trump meeting actually happens, and even then, like I want to see both sides actually implement what they're talking about, because both sides have been pretty lame at implementing what they're talking about so far this year. So I want to see that. I want to see, and then we also have some substantive talks with Korea themselves that need to get wrapped up. And we have the Fed Wednesday, which to me looks like definitely a cut and probably going to end quantitative tightening both. And that may be part of the reason we're ripping today. Is like, well, monetary policy is about to get a lot better for us. So
Why not?
yeah, I mean, yeah, 3-month annualized inflation is 3.6, but we should probably cut.
Party on, baby. Party on. All right, pal. Well, that wraps it up for me. You got anything else for the folks?
No, good to go.
All right, you guys. Well, thanks as always for joining us, and we will be back again tomorrow. Don't miss us on social media. Search Know Your Risk Podcast on YouTube, Google. You can find us on Twitter at @KYR Radio. For me, at Pinecone Macro for Chase. You guys know the drill. We will see you tomorrow. Have a wonderful evening. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.